What's up, guys? Welcome to Stock Talk with Nico Kritikos. Today, we're going to do some stock analysis for H&R Block, ticker HRB. And the first thing we're going to look at here is the stock price, the stock chart. The stock is $31 a share at a market cap of $4.7 billion. In the last 5 years, it's up 39%. And in the last year, the stock is down 14%. So if we look at their revenue, we're going to see that it is, let's go to annual. It's not very consistent like I would like it to be. I mean, you could say there's been some growth in the last couple of years, but really it peaked in 2006 and we haven't seen any growth in the last 20 years. So that's going to get a no on my checklist here. Then the next thing we're going to look at is the net income, and the net income is also not looking great. Net income is not, once again, I'm looking for consistent growth, and this company does not have it. It peaked in 2004. And since then, it's either gone down or just been flat. So, I mean, they've had, 20 years to reach those numbers again. They haven't done it. So that's just not what I'm looking for here. Price to earnings. If we go to their history of price to earnings, we're looking at, let's see, I think this is price to sales ratio, because their price to earnings was so all over the place and because they were losing money so much. So price to sales. The good thing about this is it is cheaper. Historically, it is the cheapest it's been, pretty much. We're looking at a price to sales of 1.4, which is very low. Over the past decade, it usually traded somewhere around a 4, a 5, or a 6. So, the last couple of years, it's been pretty much around a 1 or a 2. And so it looks like a fair valuation from that perspective. So that will get a yes. Is the company innovative? No. I did research trying to find something that showed this company was innovative. I don't really see it. I mean, they're really just a tax preparation software company. So H&R engages in provision of tax preparation and other services. The firm offers assisted income tax return preparation and related services through a system of retail offices operated directly by the company or by franchisees. So it's just like it's like an Intuit, right? I own Intuit stock. I think that one is a little bit more attractive because they own several businesses. H&R Block is, I mean, they are popular, right? They have lots of locations, so that's a good thing. But I don't see the innovation. I don't see them doing anything different. I don't see them doing anything to grow their income. Strong market share, I put yes, only because how I said they are popular and they have lots of locations. If we look up H&R Block locations, we could see that. Let's see. They have almost 9,000, right? So almost 9,000 locations. That's a significant number. But what's weird is on this website, it says their market share is 2.5% of the total industry. So I'm sure the industry is huge, but still 2.5% does not strike me as significant market share. I would not consider that a strong competitor in the space. So that was kind of weird. Even though it says in the US, the company has a notable market share in at least one industry, tax preparation services, where they account for an estimated 2.5% of industry revenue. So they're popular. They have a significant number of locations, but I don't see how, if 2.5% is correct, I don't see how that is a large market share. I don't really get that. But I give it a yes just because they are popular. People do use them. There's just a lot of other competition like Intuit, where I see, there's no reason people can't use TurboTax or something. Respectable return on invested capital. This is one of the most impressive parts. I put a yes. It's usually over 30%. If we look at their numbers here, what we're going to see is that last year, 32%, 31%. During the pandemic, of course, it was weak. 26, 33, 41, 35, 29. So they've been those are very strong numbers. Those are very good. So I like that. Growing equity. Unfortunately, this is an issue. If we go to their balance sheet, the equity has gone from, okay, so hold on. So it looks good here, right? In 2020, it was 71 billion, or I'm sorry, 71 million, not billion, 71 million to 211 million. So that is significant growth. Okay. But then look at this, 211, somehow it jumped to negative 264, negative 643. And then in the last couple of months, it's starting to recover a little bit, negative 36 million. So we'll see what they report for the next upcoming earnings. But I mean, we're talking about negative equity. So that's definitely not strong or growing. It's not over 15% of the market cap. Share count decrease. This gets a check. If we look at the chart for this, we're going to see on average, this was actually another impressive part. I rarely see a company that is buying back shares this heavily. So they're averaging 4.5% decrease in the share count. That is very strong. So let's see, so 1998, they had 429 million shares. Today, it's only 171. So that's, more than a 50% decrease in the number of shares. That's really good. But I mean, you don't want to rely on that and base your thesis just around the fact that they're going to buy back shares to push the stock price up. We want a growing company and a strong company. So financially, their financials are strong when you look at their return on invested capital, but why aren't they making more money? I mean, maybe they either need to acquire other businesses like Intuit, or they need to do something to get more customers in the space they're already in. I don't know. There was also talks earlier this year about the government, the IRS, coming out with their own free software for Americans to use to file their own taxes. So that's also a threat. But I think that wasn't the first time that was brought up. And, we'll see how that turns out. But I mean, it looks like these businesses like H&R Block and Intuit are, they're still needed as far as I know. To the balance sheet, of course, negative equity is definitely not 2x number of assets. Profit margin over 10%. If we look at this, we are going to see a profit margin of 16, 17, 13, 19. So that's good. Those are good numbers too. So I'm glad they got that happening. They just need to, they're making the same amount of money they were making 10 years ago and 20 years ago. So I guess it's just because there's more competitors, so they're having trouble stealing market share and getting new customers, and I think that's it. So cash and receivables are more than average annual income. I believe it's, let's see, what's their cash and receivables are about 1.3 billion. The company is over 20 years old. They were founded in 1955. And then finally, we're looking at free cash flow, and free cash flow is definitely not growing how I would like it to be. We're looking at, even though in the last 10 years it says it grew at an average of 6% a year. I mean, look, it's the same numbers that they were doing in the early 2000s. So I don't know. I mean, I think I don't know, either they need to steal market share from companies like Intuit, or they need to do what Intuit did by, having five different types of companies to build that ecosystem out. So that's what it looks like to me. So that's why until they do one of those things, I'm not really interested in purchasing this. I wouldn't consider this a buy. I mean, it looks like this is at a healthy valuation right now. It's probably right around fair value, but it doesn't look like they're growing enough. I mean, 20 years of putting up the same numbers is nothing. That's not that good. So that's my take on H&R Block. Thank you for watching. And if you have any questions, comment down below. I will see you guys in the next video.